Student loan borrowers are now on the hook again to pay off their debt, but budgeting for monthly payments could be a challenge for some after basically a 3-year pause. Local financial professional John Vandergriff from Blue Ridge Wealth Planners joins us to talk about how borrowers can better cope with that added cost. And out of the gate is we want to know, how much student debt do people in Tennessee have right now?
Yeah, so it's interesting. The average borrower right now has a little less than $27,000 of student loan debt. So obviously not making payments on that over the last 3 years has got to be something that you've got to reshake the budget and what you have going on to make sure you account for that and don't start accruing any unnecessary interest or penalties. So
What's the time frame you have to pay out those debts most of the time? Does it just vary?
Yeah, I mean, it varies because, some of the payment plans, like with the new SAVE plan that they have, actually limits it to a certain percentage of your income, but you can get on a fixed plan that can take up to 30 years to pay off. So, I mean, it really just depends on the payment plan and reschedule that you have.
Should they know about that? Do they know about that? I mean, most of these borrowers, that plan?
Well, so that's an update. There was a repayment plan called the Repay, and it was an acronym.
Right.
Now it's a SAVE. So anybody that was on that Repay plan is actually automatically enrolled to this new plan. But basically, anybody that's got income of $60,000 or less has the ability to have some reductions in what those student loan payments. And if you're making less than $15 an hour, you actually can have monthly payments of $0 right now. So looking into that, if you aren't sure if you qualify, you can actually go to studentaid.gov and be able to fill out an application to see if you can qualify and what kind of relief you can get with some of these programs.
So basically, if someone cannot I mean, when you say that, you got to be able to, you cannot afford it. Someone says, well,
Yeah.
I can't afford it, but they make $70,000 and they've got a big car payment,
Yeah.
a big payment here.
I think they call it financially vulnerable people.
Right.
So
if you can't do it, you have ways to just work around that for now. But that doesn't mean it's going away, right?
Yeah, because even those that are in that financially vulnerable state, between now and September of 24, those lack of payments or missed payments aren't held against them in the same way that they will be after that, because this is kind of the ramp-up time frame.
Right.
But again, you don't want to be deferring those payments because you'll still have interest that's accruing, so that doesn't ever go away if
Right.
you miss those payments, and so it can put you even more behind than you were at this point.
What other kinds of repayment plans are available to borrowers, I should say?
So like we said, this is a replacement of that Repay plan, but you can just get a fixed plan that seems more like normal. Or, if you're a teacher or a veteran, sometimes they have different rules and different benefits that can help them. Or I think there's a part of this payment plan now where if you've been paying for an extended period of time, there is some debt forgiveness, but it's a pretty long period that you've been making payments that have just been going into the system.
Right. John, thank you for that information. Hopefully that helps someone out there as well.